Hello, everybody. It is Thursday. Actually, no, it's Friday morning. But I said I was going to do a quick video showing you guys how I mark my fair value gaps. Okay, as you can see in my chart, this is the daily. I'm going to remove all my drawings. I want to get straight to it. This is the tool that I use. It's the rectangle. You can find the rectangle over here on Top Step X or Trading View. Right here. And I favorite it. So what I do is, let me take that off. What I do is I start with my 4 hour because I'm scalping. I could do daily, but I mean, if you want to do daily, that's up to you. But I start with my 4 hour. We're at current price. I see that I have a fair value gap here. I have one here. I have some down here. Now, how do you draw a fair value gap? A fair value gap is it consists of three candles. The first candle, the second candle, and the third candle. No more than that. Okay, it's a three candle formation. What you're going to do is you're going to mark the gap from the close or the wick. You're going to mark the gap from the close or the wick of the first candle and then connect it to the close or the wick of the third candle. Okay? So three candle formation, connecting the first candle to the close or the wick to the third candle of the close of the wick. Tool I use is rectangle. Okay? With the rectangle tool, once I click it, I'm going to now draw up my fair value gap, and now it's posted on my chart. My settings, you're gonna right click. These are my settings. My border is on yellow. I keep the middle line so that I know where my 50% of the gap is located on. And I also keep my extend to the right because this is going to map out my charts for future trades. Okay. Now, if I am going to draw a bullish fair value gap, like how I see over here, remember I said a three candle formation. I'm not going to mark this one here because there's not much of a gap from here to here, even though we are on a 4 hour time frame. Um, you know what? I actually couldn't mark it. Let me just mark this because I am scalping. So I'm going to go to my settings, click. I'm going to change the shade from red to blue because this is indicating to me that this is a bullish fair value gap. Okay, here is another bullish fair value gap. Okay. However, I want to show you something too. This technically been invalidated. Um, so, you know, although it's invalidated to me, it's an area. It wicked out here. I see a lot of wicks. I see a lot of reactions, but I really don't see price going past these two previous bullish fair value gaps. So I'm going to leave this on my screen. Okay. So now that I have this marked up on, I actually have another bearish fair value gap right here. Three candle formation. Change my settings. Okay, perfect. So this is my 4 hour markup. I'm going to now go down to my 30. 30-minute. Looking for any fair value gaps. I see a bullish one here, even though price is still kind of working in this area. It's being validated though. But this is 30-minute. How many minutes we have? Two. Okay, let me take this one off. I have any bullish. I don't care how small it is. I'm labeling it because it's gonna mean something on a lower time frame. Okay. Yeah, there ain't no gap here. Okay. Let's see. Okay. I don't really see anything here. Producer. This should be updated. So right now we're coming up. This is being updated. Okay. So now let me go down to 15-minute. I'm gonna break down price even more. And on my 15-minute, I could see I have a bearish one right here. And make sure when you're doing this, you actually click on the settings of that and of the gap and not your chart. Three candle formation. This one is good. Here's a bullish, which is reacting off of right now. I'm gonna leave this. Know too that your fair value gaps is actually your true level of support and resistance. Because now that I do this, I don't even draw up support or resistance lines. There's no need for me to do that. I know where price is going to react. Okay. I have another bullish one, right? Um, that went through. See? Um, okay. Here to here. This is bearish. It's not validated. Okay. So for now, I'm going to go down to my 1 minute. And this is where the fun begins. Oops. I did not need to draw that. Okay. So 1 minute. Let's break it down real quick. Because I have one right here to here. Three candle formation. 1, 2, 3. Hate when that happens. Just be aware of it. It's a bullish fair value gap. Um, Here's another bearish one. Okay. Okay. Now that I have drawn this up, you can look at your charts and see what price is doing. Um, draw a trend line. Break up this trend line. You see price. So I could just show you. Right. Sometimes you gotta tweak your fair value, guys. Okay. Three candle formation. One, two, three. One. There's another gap. It's just that invalidated. Okay. So what do we see here? Three candle formation. Okay, here is one, two, three. Okay. Okay. This is being invalidated. Shortly we have, yep, that's invalidated. Let me remove this. Okay. So I have my trend line. We have the breaker trend. Come down to this area, retesting my bearish fair value gap. This is my midline. Price has to close above this area for it to be invalidated. We have 28 seconds. See, I don't get caught up with oh, this is gonna be a bull run, because look, I know that it's gonna react and do something like this in a bearish fair value gap. So if price doesn't open above here to target here, I'm just gonna sit and wait, because price could start to come down into this area and then go up. So now we see this fair value gap has been invalidated. I'm going to remove this. And then what happens? We now create newer bullish fair value gaps. Price is reactive off of this, and now we're going to have the rundown. I don't want to make this a long video because I already traded. See, I have 9:15. I already did my trades for the night. I don't want to jump back in. However, this is a classic, this is a nice setup right now. You have the break of this trend line. You have the break, comes down into a bullish fair value gap, goes up, retests a bearish fair value gap for the continuation down, and it's probably going to come down into this area before it does some reaction, or it's going to completely invalidate these two very fair value gaps and come down to this area. Why? One, I could see an M being formed or a double top. So you got a couple of confirmations. You have the break, you have a double top being formed, you have the bearish fair value gap, you have the break, you have the retest. I mean, this is the order block right here. This is an order block right here. I mean, there's many reasons why you can take a sell. But I personally like to see them get invalidated before I go for the continuation. Or I would have taken it from here. And as you can see, price now just is starting to invalidate this and is going down for the run. And this is how I trade. This, I don't need indicators to do this. I remove that fair value gap. It has now been invalidated. Create another one. So now this is showing me a strong trend. Guys, look, it's going to come down to this area, give a reaction before it eventually invalidates this fair value gap, and we move down to the downside. But price is not going to come down to the downside immediately. It's going to have to invalidate this fair value gap. It's going to have to create other fair value gaps, meaning you're going to have a couple of moves up before you create stronger ones in here till you hit this one. Or it doesn't have to invalidate this fair value gap, and it could go up here before it pushes through. But remember I said, one, I saw an order block here. There's an order block right here. Move this over. And I also saw the order block right here. And order blocks are, one is the previous opposite candle before the push. Oh gosh, I'm tired. I'm sorry. Order block is the previous candle is opposite of a candle's next big move. I don't know why I can't get this out right now. So in other words, an order block right here would be, we're at a longer trend line. There's reasons why I call this an order block too. There's a lot of reasons why I would look for this. One, you're hitting the bearish fair value gap and you have your trend lines. Okay, this is a bullish candle before a bearish run. Okay, bullish candle has formed between these two for a bearish run. Okay, I would not consider this an order block only due to the location. This right now is showing me a rejection candle in this area. Yeah, and for this to be an order block for the upside, this will have to be a red candle. It can be an order block for the continuation going down. So that's it, guys. I don't want to make this video long, and I will load more videos, just explaining my theories and how I do things. But this is how I keep track of my fair value gaps, how I draw my fair value gaps, and how I don't even use this no more, how I allow the market to guide me with my fair value gaps. And it's not just any fair value gap. I have my settings where it extends to the right so I can see where price is going to do in the future. I can see the algorithm, and I label it so that I know which gap is bearish, which gap is bullish. Right now, price is invalidating this gap. And how come I did not draw this? This one just got invalidated. So we're going to move this. And this is how you can see how markets begins to boom. Child, if y'all go through my videos, please. I am not a fancy YouTuber at all. I don't know how to do all of them things. But if you ever go through my videos, you will see, one, I always show examples on live market, and you see how things play out. And I was just about to say to you guys, now that I created a bearish fair value gap on this 1 minute chart, if you just take a step back and look, what do you see? You see more bearish fair value gaps than you do bullish. Even though this is bullish fair value gap on a higher time frame, it's being invalidated right now as we speak. So if I'm seeing all these bearish moves, where's my next target? My next target is going to be down here, right? My next target is going to actually, there's another bearish fair value gap right here. I'm going to start looking into these areas. What did I just show to you guys? I didn't even have this marked up. Look at this. I didn't even have this marked up. That's why it's important to mark your fair value gaps. That's why it's important, even the in between. Um, if I would have had, I was doing this video for you guys, but check out how these fair value gaps add up. Gap within a gap. A lot of times, yeah, they may be invalidated. And honestly, this is not invalidated because price did not close. It wicked. Yes, it wicked through, but it did not close. Look, we're going to come back up here. Now we're going to completely invalidate this. And hopefully we're going to aim for this level right here. Guys, I'm not a fancy YouTube person, but I do know how to trade. That I will say. Follow along. If you know anybody that's struggling with trading, share this video with them. Sometimes I believe in being more simple. I don't have to have indicators on my screen. I don't need to, cloud my head. For me, this is fine. I could look at this. If the lines are too much for you, then go in your settings, remove your midline. Some people may think, oh, the midline. I'm not gonna lie. I could look at this and tell where the middle is. Do I necessarily need a midline? No. But I'm going to show you why I keep my midline. Look, it acts as something. Okay? Your midline is there. It helps. So that's up to you if you want to keep your midline, look, prices reacting, or if you want to take them off. I keep mine, and if you want, you can keep yours. I mean, these are all your preference. So to recap, fair value gaps is a 3-candle formation. Once we have a 3-candle formation, we draw our fair value gaps connecting the wick or the closing of the first candle to the wick. Oh gosh, I'm sorry. The wick. All right. I draw this. I'm so sorry. I think I drew this. Yeah, this is a higher time frame. So I'm looking at something completely different. Let me bring this back up for you guys. This must be a 4-hour. Oh, a 15-minute. Yep, 15 minutes. Okay, so 3-candle formation, and you're connecting the wick or the closing of the first candle to the wick or the closing of the third candle. Doesn't really matter the time frame. I am just doing a recap and I wanted you to see it. Once you do that, you're going to go down to your lower time frames and continue to create your fair value gaps. Once they become invalidated, you take it off your screen and you mark up the new ones. Once you have the new ones, you continue to follow the fair value gaps and use it as your roadmap. Okay? So that's it. And I think when we was doing this, I had mentioned price coming down and targeting the next fair value gap. Yeah, I sure did. So right now, this bullish fair value gap has been invalidated. Okay. So with that being said, we are going to remove this, and I'm going to get off, and I'm going to show you guys now how your charts look. And I'm going to show you how now you can see sellers are in charge of this market. Okay. So I hope this helped. I called this move out as I was showing you guys. Um, and it played out exactly. Price came spiked to this bullish fair value gap, and this happened um this low was from October 20, oh gosh, October 3rd. Jesus, I'm tired. October 3rd, 9:35 p.m. So that was earlier tonight. And now we're gonna break through. And we're gonna target this, and we're probably gonna target this. And if anything, price will probably bounce and go for the upside back into this bearish area. And then we will see if price is going to invalidate this to start creating bullish fair value gaps into this area. Just got to follow price, follow your fair value gaps. Okay, guys, I don't want to make this long. I probably made it long enough. Enjoy the rest of your night. Bye. That'd be nice if I knew how to turn this thing off. I told you I'm not a genius. Okay, how do I? Okay, stop recording. Bye, guys.